thank you so much, everybody, for coming back to our Bay Area Market Update webinar. I'm so excited that we are back. There's so much going on, and I feel like I do owe everyone an update about what's going on. Let's start with the residential side first. I know you see all these graphs. I will try. One of the questions we always get asked is like, hey, isn't the summer the hottest real estate market? It's like, you can sell for the highest price possible. So this is what we want to share with you, is that if you look at every year since the last 5 years, 2021, we have the highest inventory around the summertime. So in 2021, you see that around August, 2022, July, August timeframe. And 2023 is a little interesting. We actually have very low inventory, and I'll tell you why later on. We have a very interesting chart later on. I can tell the story why 2023 we didn't have a high inventory around the summertime. Now, 2024, again, around the summertime, July, August timeframe, we peaked on our inventory. And then 2025, July, as you see, it peaked even highest compared to the last 4 years. And then now we are going into the summer, and then you will see that our inventory is going to go up. And you might want to ask, what is happening in the next couple of months? What are we expecting? And this is why we are doing this market update, and I'll continue to share more information with you. But I also, before I go to the next slide, I do want to show you guys regarding the number of sold listings. As you see the red line here, no matter like what these lines are telling us and how much it fluctuates in terms of number of listings, and you see that year we kind of peaked around in terms of the number of sold listings around 4,000 to maybe a little bit 4,500 listings sold around springtime of every year. So to answer your question is that summer is not exactly the hottest real estate market, meaning that you actually can probably have a lot more options because a lot of people are out on vacation, while spring is really the best time for sellers to consider selling, especially March or April. Now, months of inventory here is a chart to show the months of inventory in the 5 counties: Alameda, Contra Costa, San Francisco, San Mateo, and Santa Clara County. We are around 2.5 or maybe as low as about 1.4 months of inventory, and as high as 2.8 months of inventory. In the balanced market, we usually see 4 to 6 months, but in the Bay Area, we have been seeing a lot of less than 1 month of inventory in the past years when the market was really hot. But now we're seeing that we are at about 2.5 months of inventory, and we're kind of spoiled in the Bay Area. We're like, oh my God, that seems high. But really, if you compare to other parts of the country, we are still in a really good shape. Number of days to sell in the median to sell in these 5 counties, and we're still seeing pretty good numbers in terms of like last year. We did see the number of days on the market going up all the way to August, about 20 days. And then towards the end of the year, of course, it started going back up again. And January, just a reminder is that when you see January data, these are typically from December, right? Because it takes about 30 days to close the escrow. So this 25 days is reflecting how long the listings in December were staying on the market for. Springtime came about, again, you see that it's less than 2 weeks of days on the market. And what about the competitiveness? How much more do you need to offer above asking price? As much as we keep talking about the market's kind of slow, but we are still seeing a lot of 100% of the offer price over asking. So we are still seeing about like 2, 3, 4%. And then this past year around March, we did hit about 6.3% over asking. And I don't know if you guys saw this news on NBC Bay Area. It did say that San Jose currently ranks 2nd in the US for home sellers pulling listings. It's unfortunately, we do see a lot of listings staying on the market for a long time, so sellers decide to pull them out of the market. If you look at the chart here, the blue line for Santa Clara County, the purple is San Mateo County, and then the light yellow line is Alameda County, and then orange is Contra Costa. And then San Francisco is the green line. And if you notice that Santa Clara County has always been like below Alameda and also Contra Costa County in terms of like number of listings withdrawn. But in the recent months, in the past couple of months, all of a sudden you just see this line went above Alameda and Contra Costa County. I have my theory about this, but then I definitely want to hold on to this until we start talking with Dr. Souza regarding like what's going on with the Bay Area market. All right, so in terms of the number of listings that you've been pulled, you can see that we are at 453 number of listings being pulled compared to last year. Actually, we are still a little bit lower than last year in 2025, May, June, July. And again, I don't know if you guys remember what happened last year, and we will go into that as well and a little bit more on what's been happening in the economy and also real estate market. And in terms of list price decrease, we do have quite a few listings that dropped their price. You look at, let's say, around November, December, which is a slower market, we had about 284 listings, 145 listings, but it just shot up in March, April, and May for Santa Clara County. The San Mateo County is actually a little bit more moderate. It's not as much of as many listings have dropped their prices, but then we also see a more dramatic increase for Alameda County as well as for Contra Costa County. And then transactions fell through. That's the good news, is that we actually don't see a drastic increase in terms of transaction fell through. When those buyers who are buying, they are still going through the whole entire process. So that's the good news, that we're not seeing people just kind of like really scared and drop out of their escrow. Here is the chart that I really want to share. Some of our clients may have seen this chart already, but I just love this. We track the median sales price of all these single family home in the 5 counties since March of 2022, every single month. And it really does tell a story. Just use Santa Clara County for now. In March of 2022, if you guys remember, that was around the interest rate hike at the time. It went up really fast. And I keep using this analogy. It's like as if somebody just turned off the light. We would hold open houses, doesn't matter how many times we drop the prices, and we would call all these different agents for their open houses. People just weren't showing up. People were really scared when they saw the interest rate hike. The interest rate went up so fast. So you see that, I'll use Santa Clara County just so that we can focus a little bit more on the numbers. It's like it went up to about $1.95 million in April of 2022. And then it just started going down, 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 all the way to December 2022 to 1.465. While the other counties, they kind of bottom out down to around January of 2023. So San Mateo County went from $2.25 million, went all the way down to $1.48 million in January 2023. Alameda County, it went from $1.5 million right here, and it went down to 1.022. And then San Francisco County, it went from about $2,050,000 down to 1.385, and Contra Costa County from 980,000 down to 725,000. I know a lot of you're probably thinking like, man, I wish I had bought something at the time, right? But if you think about the consumer psychology at the time, everyone was just so scared. They feel like, or they think that the price was gonna just keep coming down. So like I said, at the time, it felt like as a real estate agent, it just felt like someone turned off the light. It wasn't turning it back on. And so we were just sitting around kind of like, oh my God, like trying to encourage buyers that this is really a good time. And then while 2023, what we are seeing is that you start seeing people kind of start coming back out, and they feel like, okay, it doesn't look like the interest rate is going to come back down anymore, or they feel like I'm getting used to the high 6 or even 7% at one point. So the pricing kind of came back up, and then the first few months of the year, it went from 1.465, kind of came up to $1.8 million in June of 2023, but it just kind of stayed right around there. It's the same across all these different counties. Their number was just kind of staying right around the same range. So we call the 2023 time period is kind of like an adjustment period where they're getting used to seeing these high interest rates. Now, in 2024, that's when a lot of people also very excited. They're like, oh my God, interest rate has gone up so much. It's time to come back down, right? And so the first few months, a lot of people came back out. We saw a surge. And then the interest, even though the interest rate was still at high 6%, I'm talking about 6.75, almost 7%, our median sales price went above 2022 peak number with much higher, at least 2% higher interest rate. And then same across all these other counties as well. And then that's when, but at the time, that's when everyone kind of realized that, wait, the interest rate is not really coming back down that quick. So, and then also, of course, it's the summer, so it kind of cooled back down a little bit. And then we have the election around November of 2024. So also usually before elections, that's when we see like a lot of people say like, well, let's see what's going to happen. It's that uncertainty that always slow people down. And somehow, no matter who get elected, to be honest with you, at the end, people just start coming back out again, just because now they know the answer. Now they have more certainty. So this election happened, and then you see that in January 2025, again, we saw the market have come back up, and it kind of peaked around this time, which is really interesting, is that in the March of 2025, Santa Clara County, we peaked in around May of 2025 at $2.15 million. And then San Mateo County peaked in February of 2025 at 2.075. And then Alameda County at 1.36, San Francisco County at 1.907, and also Contra Costa County is kind of peaked a few times to $900,000 in June of 2025. But I don't know if you remember what happened in 2025. We had the tariffs announcement, and that was again another, we saw that another, not really exactly turning off the light, but then we definitely have dimmed the light. A lot of people, we would have one open house with 60 people showed up, and then they announced the president announced the tariffs, and all of a sudden people weren't making offers. They were just really worried. And then with the different tariffs that have been announced, and sometimes 35%, sometimes like 100%, sometimes even more. And it was just a lot of people weren't sure what's going on the market, and so they kind of slowed down. But it didn't really drop a lot. It did kind of come back down to $1.8 million, and then the story kind of happened again. If you don't see the pattern by now, is that once January started, see that the pricing started to come back up again. So in April 2026, we see that it has for Santa Clara County came back up to 2.1, and then we came back down a little bit in May of 2.05. San Mateo County still kind of went up to 2.22, Alameda County 1.38, San Francisco County 2.2, and Contra Costa County at $920,000. And this is when we kind of start seeing the effect from the Iran war. And why Iran war happened end of February, but we really didn't start seeing the slowdown until May. And then we're going to go over that again in a little bit to talk about what happened. So that was, again, one of my favorite charts to talk about. A lot of stories. I just love seeing it. And then now, if you really want to put it into numbers, is that, so since the lowest, when what I mentioned is like 2022, the lowest number, we have come up 39.93% in Santa Clara County, San Mateo County 44%, Alameda County 31%, San Francisco County 42%, and Contra Costa County it came up 22%. But compared to the peak in 2025, Santa Clara County is the only one that actually came down, negative 4.65%. But everyone else is still higher than the peak in 2025, at 5.34% higher in San Mateo County, 1.47% Alameda County, and 15.36% for San Francisco County, and 2.22% for Contra Costa County. This is also very interesting in San Francisco. You might have seen a lot of news about like how San Francisco has gone up a lot recently in terms of the real estate prices, rent prices. So we will also talk more about it. All right, of course, we cannot not talk about the mortgage rate. We track the projections from Fannie Mae, Mortgage Bankers Association, and Wells Fargo every single month. You see these red parentheses is talking about like the projections change from last month. So they didn't really change their projections from last month. Sometimes we see like a 50 basis point or 30 basis point change from their previous month projections, but this time they're pretty consistent. However, I am expecting this projection is probably going to change again next month, just because we have more news that came out regarding inflation and all the other factors. So I do expect that these numbers might be changing a little bit next month. But what you are seeing is that they are projecting the numbers right around a low 6%, and then they are looking at like the mortgage rate should be coming down. And the biggest question, and I don't know if Dr. Susan will be able to tell us whether we're going to see the interest rate is going to come down slightly or actually going the opposite direction. And I know he has a lot of charts he's going to show us. All right, historical mortgage rate. This is really, if you still remember March of 2022, we were at 3.97%, and that was even the lowest that we had, right? I think a lot of our clients had gotten their mortgage rate around 3%, 2.85%. For those clients who are getting your mortgage rate around 6 or 7, you must be thinking like, oh my God, that's crazy. Indeed, it was pretty crazy. And then it's very, very not, I would say, is not common, right? If you look at historically, we never really have such low interest rate. It's always around 5, 6, or sometimes higher. So what we are saying is that March of 2022, why I said the light, somebody just turn off the light. If you see from March to April, it went up to 4.95. That's almost 1% within 1 month. And then in May, another 40 basis point, so 5.38%. And then soon by November, it hit almost 8%. That was insane. Like, people were just not used to it. This is just really insane how high it has gone up to. The affordability, obviously, it makes a difference. Your pre-approval, your loan amount is going to be pre-approved much less than before. And then the interest rate just kind of started to stay around. Luckily, came back down to low 6, but it did go back up. And then around this time of February 2025, we kind of see like the lowest is at 6.1, or some other sources would say about 5.99%. Because I don't know if you guys remember, the news actually said like, oh, the mortgage rate finally came down to under 6%. Everybody was so excited, thinking it's going to continue to go down, but instead it went up. So what happened here, is that, like, for example, Mortgage News Daily said it's 5.99%, it started going back up. So if you look at the time, this is February 24th of 2026. And look at the headline here. What happened February 28th? We had the Iran war. And then since then, the interest rate started to go up. All right. I know there's a lot of information. Now I'm going to go into commercial. This is a lot faster. I'm going to tie everything together so you understand why I'm putting all these together. Let's look at the rental market trends first. San Francisco, their average rent now is $3,440 per month. In some of the neighborhoods, actually hit $4,000 per month right now. They had increased 10.4% from last year. San Jose is $2,789 per month and increased 4.4%, while Oakland is $2,166 per month and increased about 3.7%. What's interesting is that even SF Gate, San Francisco Gate, June 4th article had talked about that the AI gold rush is rewriting Bay Area housing. And as you see that, it really increased the rent growth substantially. Soma up 36%, Mission Bay up 22%, South Beach up 21%. And then all the other area that has gone up quite a bit because of the AI gold rush. So, but then I know a lot of people also really worry about AI, right? Because AI, it seems like it's taking away so many other jobs, causing so much layoffs. So what will happen with the AI? And then if we look at the employment, construction, vacancy, and rent, and compare these three major metropolitan area, San Francisco, San Jose, and Oakland, you see that San Jose has, they all have a less employment growth. So Oakland has negative 0.6%, San Francisco negative 0.4%, San Jose dropped the least, is negative 0.2%. And then while San Jose also has the least new construction building, so we'll have a little bit less supply, which help maintain the rent amount. And also it does have the lease drop in terms of vacancy. So it doesn't have as much vacancy drop, which is the same as Oakland. And while the rent, actually, this is it goes up by 4.4% versus San Francisco at 3.4%, and also Oakland at 2%. So it seems like San Jose is doing pretty well compared to the two other markets. But I want to see a little bit more in terms of like what's going on inside these submarket. The submarket within the Silicon Valley and the East Bay area, these are probably the most popular areas that our clients ask us, hey, I'm interested in buying multifamily. Let's check out these different cities or suburban area. And you see Sunnyvale has the highest asking rent growth at 6.7% in the last 12 months. Median cap rate is cheapest one is Hayward, Castro Valley, and Union City, which is pretty understandable at 6.1% cap, meaning that you can it's the more affordable area to buy. Vacancy at 3.4%, which means it has the least vacancy for Sunnyvale compared to the other areas. While the highest asking rent is actually Santa Clara at $3,735, and the lowest is Hayward, Castro Valley, Union City area at $2,304. While new construction, though, Hayward, Castro Valley, and Union City has the least number of new constructions building, so it's not overflooding with too many supply, so which is a good area. So these are some of the factors that a lot of investors will look at before they decide where to invest in. And I also want to add on to the one more asset type, which is industrial. Industrial has been really hot for the last few years. San Jose Metro, East Bay, San Francisco, that asking rent growth in San Jose Metro actually still going up 2.3%, while East Bay went down 2.3%. Median cap rate is the most expensive in San Francisco at 5.5%, while vacancy rate is the lowest in San Jose Metro at 8.9%, and the employment growth is doing best is actually in San Francisco at 0.07%. All right, let's do this key takeaway so we can start. I just cannot wait to talk to Dr. Souza. The key takeaways here is that you see inventory increase. As you see, sellers have become less patient. We have a lot more price reduction and more listings withdrawn. We are seeing mortgage rates came back up above 6% now, and buyers become a lot more selective. Oh, and then investors do need a lot more down payment in order to qualify. So this is the reason why I wanted to invite Dr. Souza to come and talk, because this is such an interesting market. I just love seeing like what is going on, because I think looking at these numbers really tell a story. We cannot just use a blanket statement for every single neighborhood, every single city in the country. It is important for us to look at what's going on, especially Bay Area is such a unique market.